Hey everyone, welcome back to the show. It's here where we cut through the noise that's impacting your life and your finances, giving you the tools to build wealth and live life on your own terms, because that's what it's all about, living life on your own terms. And that's what the show is here for. Today, we're diving into a new topic that might feel like deja vu all over again. It's the potential for another 2008 mortgage crisis. And look, I'm not fear mongering here. They are doing the exact same thing they did that was a major cause of the financial storm in 2008. So here it is. There's a new scheme under the Biden administration's economic policies that could be setting the stage for history to repeat itself. Today, we're focusing on the potential disaster associated with a new home equity loan policy that they want to implement. Before we jump into it, don't forget to ring that bell below, hit subscribe. Love to hear your comments, feedback. Let me know what you think and where you're finding opportunities. Please share. Also, just a quick shout out for my cash flow wealth building system that is changing lives. It's become extremely popular, especially in this economic environment. It's a straightforward strategy where I guide you through a simple process to quickly identify winning stocks. Then I show you how to use indicators very simplistically to know the best times to buy and sell those stocks. And then I show you how to generate instant cash flow on every trade using a simple option strategy. Really is a game changer. And by the way, this strategy has been around for many, many years, successfully used by thousands of people every single day. Yet in my experience, most folks have no idea it exists, and they're leaving a lot of money on the table. And I've taken this proven system, this strategy, and I broke it down into an easy step-by-step process that anyone can learn in no time. And here's the kicker. It's the exact same strategy my 94-year-old father, who just celebrated his 94th birthday on Friday, the 21st. It's the same strategy he uses to generate $15,000 to $20,000 a month consistently as a hobby. And he's been doing it for the past 13 years. In fact, in March and April of this year, he hit $40,000 for each of those months. Those are his biggest months. And of course, I use this method myself to earn thousands of dollars every single month in less than 30 minutes a week. And no, it's not day trading, because I certainly don't have time for that. And I'm sure you don't either. And if you want to just see a quick video overview on this, head over to johnmacgregor.net and you'll see a button to click to get access to the short video. Trust me, it's definitely worth a few minutes of your time. All right, so let's dive into the madness. As I said earlier, brace yourself, folks. It looks like we may be headed down a familiar and dangerous path. Remember the 2008 mortgage crisis? Remember that one? Well, one of the sparks that ignited that firestorm was Freddie Mac and Fannie Mae offering generous taxpayer guaranteed mortgage insurance to risky borrowers. That was the beginning of the collapse. That was really the foundation of the impetus behind the collapse. And politicians in Washington, they all seem to have a very short memory, because here we go again, potentially repeating the exact same mistake, but compounded in a much bigger dollar amount. Just 17 years ago, the subprime mortgage crisis torpedoed the economy and sent financial markets into the biggest tailspin since the Great Depression. Millions of Americans lost their jobs, businesses closed, lives were lost. I mean, it really had a huge negative, disastrous impact on a lot of people. And as I said earlier, one of the key factors was Freddie Mac and Fannie Mae providing insurance for risky loans with low down payments. Despite assurances from Washington at the time that the chances of these mortgages going bust were less than 1 in 1,000, we all know the story. It all blew up in the faces of taxpayers. And here we go again. And the biggest taxpayer bailouts went to not just Wall Street banks, but significantly to Fannie and Freddie. And here we go again. The Biden administration's latest scheme encourages families to borrow more money by using the equity in their homes as collateral. And home equity loans can be very, very risky, unlike mortgages, because if home prices fall, homeowners can find themselves with negative equity and a squeeze. And with nearly $18 trillion in home equity, this is one of the largest sources of savings for American families. Yet, of course, the Biden administration wants to push Americans to borrow even more at a time when credit card and auto debts are at an all-time high. This is ridiculous. If home values drop, families could end up underwater and default, just like during the subprime crisis. According to the Wall Street Journal, the likely losers from this plan would, of course, be, take a guess? That's right, you and me, the taxpayers. But here's the key. The evidence from 2008 shows that low down payment and home equity loans are prone to default. I mean, it makes common sense. So you got to be asking, scratching your head, why would President Biden want to go down this dangerous road again? I mean, he's done it on every other policy that he's implemented, but why is he doing it again here? Well, there are two reasons behind this. The first is the underlying reason, which is he doesn't care about the working or middle class. He doesn't care at all. I mean, just look at any of his policies. It's the double barrel middle finger to the working class. Second, the obvious answer is that he wants to stimulate spending by putting more cash into consumers' hands, hoping they'll spend it before the election. And his devious plan is to put more borrowed cash, making people feel wealthier in order to prop up the economy just in time for November 5th. And with inflation still going higher, this is a time when Americans should be saving and paying down debt, not borrowing and spending more money. Bank of America estimates this scheme could result in $1.8 trillion in government-insured home equity loans. This is the homeowner equivalent of the student loan forgiveness program, which Biden is still pushing. But there's another problem. Fannie and Freddie Mac, they were created to promote home ownership, not to juice government spending, especially before an election. A home equity loan depletes a family's ownership stake in their home, effectively encouraging less home ownership. And this raises an obvious question. How in the world is this in the interest of taxpayers or the country or the economy? The quick answer is it isn't. It isn't. Almost comically, the Biden administration pledges, promises, assures us this won't cost taxpayers a penny. Yeah, we heard the same assurances with Fannie and Freddie before they needed a $200 billion bailout in 2008. This is also happening at a time when Fannie and Freddie are insuring million-dollar homes, which they've never done before. This is simply more debt overhang for taxpayers and a giveaway to the housing industry. Look, Washington is already awash in debt, and now Biden thinks America needs more of it. We're getting close to crossing $35 trillion in debt, which is climbing at a rate of $1 trillion every 100 days. Our interest just to service that debt is now $1 trillion. That's the largest budget item on anything we spend as a government, interest. And that interest is rising as our debt is rising. I mean, this is not the time to implement something like this. But again, they don't care. It's all about maintaining power and control. Let the economy, let the American people be damned. There's got to be a more economical way to stimulate the economy without risking another financial crisis, but they don't know how. They've never run businesses. They've never been in the real world. They've never had real jobs. Their whole approach to this is how to carve up a shrinking pie into more pieces and distribute it, rather than how do we stimulate the economy and increase the pie. I mean, the parallels between now and '08 are striking, because back then, Freddie Mac and Fannie Mae played a significant role in inflating the housing bubble by insuring these risky loans. And today we see a similar trend with the Biden administration's push for home equity loans. In both cases, the policies are driven by a desire to stimulate the economy through increased consumer spending. However, the underlying risks remain the same. Increased borrowing against home equity can lead to financial instability, especially if the housing market experiences a downturn. So to wrap up, while the intention behind the Biden administration's policy might be to goose the economy prior to an election, I mean, the potential risk far outweigh the benefits. They don't see it that way. Again, it's all about maintaining power and control and getting votes. I mean, just one day, can we learn from the past and avoid these policies that lead us in that direction of more financial calamity? I mean, can we finally learn? I mean, a more sustainable approach, in my opinion, how about involving financial literacy? How about that idea? But they don't want to do that because a financial literate society cannot be controlled? How about encouraging savings and ensuring that lending standards remain stringent? Because only by taking these steps can we hope to prevent a repeat of the 2008 mortgage crisis and ensure long-term economic stability. But again, we're going down this road again. Folks, the last thing I'll say is that elections have consequences, and we're dealing with those consequences right now. And therefore, it's more important than ever to understand what's going on and to spread the word to people you know, because so many people are unaware of what is really happening. Please pass this video on because we're all in this together and we need to support each other. Also, don't forget, would love to hear your comments below. And just a reminder on my very popular cash flow wealth building strategy, you can find it on my website at johnmacgregor.net. All right, till next time, take care and aloha. Bye-bye.